All right. Looks like we are live. There you go. We are live in one, two, three, four, five. I don't even know how we went live in some Freedom Insurance pages, but we are. Let me make sure we're good here. Um, how did we do that?
Oh, I see us. Woo. Okay.
All right.
Can I share this?
Mm-hmm.
Hmm.
All right. So we are live. Sorry, guys. And let me see here if this looks better. Sorry, I don't have a background today or any of that stuff because I'm out of town. There you go. Cool. All right. I need to fix this chair from going back because I'm going to be doing that rocking stuff back and forth. How do I stop it? All right. So today we're going to talk about Robinhood. Huh. How does this thing stop? It's like a different chair. Well, it's never used this chair because I've never stayed here before. But let's see who's on here. We got some good people. If you're here, please comment. Tell us where you're from. I see there's 15 people on here today. So we're going to be covering some really cool stuff. So welcome to our live stream. My name is David Bettis. I've got Raul Gomez here, and we are going to cover something that's really interesting, I think, to most people today, which is Robinhood. Now, Robinhood, we're going to talk about what it is, what it does, but if you really think about Robinhood inherently, the whole concept of stealing from not really the rich, because that's kind of a misconception. It's like government, right? And giving it to the poor. And that's the actual concept of Robinhood. But today we're not talking about that. I just wanted to share that with you. And I remember watching the movie Robin Hood Men in Tights. Did you ever watch that movie?
I did. It's been a while, but I did.
And every time I think about the Robin Hood, I never think about any of the good ones. That one's the most funny one. So,
That one
um,
was funny.
anyways, we're going to jump right into this, man. So today, we're going to ask today's kind of Raul's topic because Raul has been a big advocate for a lot of investment strategies, and one of them being stocks. Now, I'll be disclaimer for myself. Raul can give his own, but I'm not a financial advisor. I don't invest money for people, at least not in the stock market. And and you have to have a license to do this. So, just a disclaimer to all of you: don't take advice from somebody on how to invest with, if they don't actually have a professional, well, I wouldn't say a professional degree or anything. Let's just say unless they're making money, then you should probably listen to them. But other than that, don't listen to them. So, all right. So Raul, man, where are you from, man? So for the guests that are watching this, because there's a lot of them.
Sure. But let me go ahead and give my disclaimer as well. I want to make sure that that we abide by guidelines and regulations. Yeah, this video is for education purposes only and should not be taken as financial advice. If you want financial advice, then you should speak to a financial professional. Today we're just talking about just educational stuff and things that might be able to I don't know, turn on the light bulb in your head and kind of point you in the right direction. That's
Yeah,
that's all
yeah.
it is.
So the statement is, "Don't sue me, bro." Right?
Don't sue me, bro. Yes, that's exactly the statement that we're trying to imply here.
All right. So where are you from, man? Tell me where you're from.
So I am from a little town here in the Rio Grande Valley called Rio Hondo, Texas, which
Cool,
is
man.
ironically the same town that David is from.
Yeah, yeah. So we
Yeah,
kind of grew up in the same community. So tell us a little bit about your education, where you went to school, what you did.
sure. So I went to high school there in Rio Hondo, and then when I graduated, I went to Texas A&M Kingsville, and I got a degree in music education. Then I was a teacher for about 8 years. The last 2 years of my teaching career, I decided that I wanted to do something else, and I figured that I needed to go back to school to do that something else. So I got into this crash course to take all of my undergraduate classes for business to then be able to get into the School of Business (MBA) through Our Lady of the Lake University, but they had a satellite campus here in the Rio Grande Valley, so that's how I got my MBA. And then around that same time, while I was working on my MBA, I got my license to be able to do insurance and some financial products. not stock market financial products, but some financial products, just pretty much conservative financial products that we help our clients with. Um, and then throughout the course of that whole endeavor, then David and I met up at a conference, and obviously we knew we were from the same hometown, and so he was starting his thing, and I was doing my thing, and we figured that if we kind of partnered up and worked together, we could get more achieved, and that's what we did. And here we are, almost 6 years later.
Yeah, man. So
It's been good.
why should people listen to you today about Robinhood and investments? Just curious, what makes you qualified not to give advice for people to invest, but like what gives you some background in this?
Well, I would say probably the most credible aspect of the information that I'm going to give you today is because I've done it and I've lived it, so therefore I can give you my personal experience. But I will tell you that when it has to do with your own money, it's always wise for you to do your own due diligence, always, especially when we're talking about the stock market and putting money into stocks or anything where there's a potential risk that you will lose money. And so that's very, very important. Everybody needs to do their own due diligence. I've done it myself. I've made money. I've lost money. I do a lot of learning. So I want to say that every single day I'll probably spend 3 to 4 hours just learning. Just learning new things, just watching information, just downing content on different ways to grow my own money, but then different strategies that I can share with people, as far as maybe potential things that they can do in the future.
Cool, man. So a lot of trial and error, a lot of studying. And by the way, Raul is a guru when it comes to this stuff, not just because he's an active investor in the stock market, but more so because he really is studying things. So I was going to ask you what's Robinhood and all this stuff, but really just tell me why you think Robinhood's really popular, man. Why are we talking about Robinhood? What's so important about that topic or that platform?
I think that I think especially last year, especially in 2020, myself included, I think a lot of people received a lot of money that they weren't counting on. And a lot of people said, well, what am I going to do with this money? The people that were actually smart said, well, I actually want to take this money and do something with it and invest it somewhere. And so they started doing their research and they found the Robinhood platform. So Robinhood, what it is, it's what they call a broker. It's a free broker. It's a platform that you can utilize for free to buy stocks. And stocks can be stocks in any company you want. It could be Apple, it could be Tesla, it could be Ford, it could be Microsoft. It doesn't really matter. It's on there. And so what you can do is you can either download the Robinhood app and create your account, or you can do it on your computer, and you deposit money into this broker, and it gives you the opportunity to be able to buy stocks. You can also buy some cryptocurrency on Robinhood. I know you can buy Bitcoin and you can buy the douche coin. I mean, dog coin or doggy coin or whatever it is that you want to call it. So that you can buy on Robinhood as well. So it's just a free platform for you to be able to buy stocks and some cryptocurrencies.
Is it good or bad? Is it a good or bad platform?
I think I think it's a great platform. I think it's a great platform because it's very user friendly, very easy to understand. And when you're getting into this, when you're new into buying stocks or buying shares of companies, or maybe buying shares of an ETF, of an index, which we can discuss either today or in another video, you want to go with something that's easy to use. You don't want to go with something too complicated. Like the platform that I use is through TD Ameritrade, and that thing is like super complicated. It literally took me like a month to learn. And the reason why I went through that platform is because I actually took a course on how to do some day trading and swing trading, which is where you buy and sell stocks in the same day, or you buy and sell stocks within the same week or same 2 weeks, which I learned a lot. Those guys are very, very knowledgeable. And one of the platforms that they recommended was that platform, the TD Ameritrade, but that's like real complex, like higher end stuff. If all you're looking is just to buy stocks, Robinhood is a very, very easy platform for you to be able to do that.
So is there anything that people need to know about Robinhood before they start using it, or maybe now that they're using it, they should know before doing any more investments?
I know that Robinhood got a bad hype during that whole GameStop I don't know if you want to call it a scandal or the whole GameStop ordeal, where like GameStop stock went like through the roof, and so people were making a lot of money. But what a lot of people, I guess, may or may not understand is that if let's say you have 10 shares of GameStop, and let's say you bought them at $5 a share, and then those shares went up to $300 a share, and you sold those 10 shares at $300 a share, then that's the profit that you get to keep as long as you can sell the shares. What ended up happening with Robinhood was that apparently there was some type of restriction that Robinhood did where you weren't able to sell your shares. So what happened? Well, the stock came tumbling down, and people weren't able to get out of that particular trade or that particular stock at the right time, and so they lost a lot of money. They're getting a lot of bad hype for that. But that's an exception to the rule, I would say. I mean, pretty much if you buy just regular shares on a company that's moving normally, and you sell those shares at some point, I mean, it's not going to be a big deal. You're going to be fine.
All right. So let's just kind of get into stock investment, man, investing itself. So I guess really, man, because there's a lot of people who I know who use Robinhood today. And if you're watching this and you're thinking, well, I've used it, I put some money in it, okay, well, by the way, I don't think it takes a lot of energy or expertise, or there's a lot of words to describe this, but really it's super easy to invest. So tell us, who should be investing? I mean, if it's that easy, who should be doing it?
Well, I'm going to tell you first of all who should not be investing. Let me start there. If $1,000 is all that you have to your name, that's all you have, you probably should not be putting that money into Robinhood. I'm just flat out telling you, if $1,000 is all you have to your name, you don't have anything else, you have $6,000 worth of debt, you have credit cards charged, and you have a whole bunch of other negatives working against you. And I hate to be blunt, but sometimes I have to be blunt. $1,000 isn't going to do shit for your financial situation. And I'm not trying to be condescending, but that's not going to change your life. I think that a lot of the time, so many people think that by taking $1,000 and putting it into Robinhood and waiting for the $1,000 to go up to $1,100 and then cashing out and then trying to do it again, like a lot of people think that doing that type of stuff is going to change your life, and it's not. What's going to change your life is figuring out how to make better financial decisions so that you can turn the $1,000 into $2,000 and eventually into $3,000, eliminating all of that debt that you have at 15, 16, 17% interest. And once you have that in place, then you can say, okay, now let me take $1,000 or $2,000 and start looking for rock solid, reputable companies that I can invest in long term. But this whole putting in $1,000 and then it turns into 1,100 and it turns into 1,050, then it turns into 950. Like, that's just gonna put you in a situation where you're gonna lose a lot of money.
So I mean, if all I had is 1,000, and you're talking about all of I had, if all that's all I had, period, or all I had in savings.
All you had in savings, yes.
Okay, so
which
so
could very well be the case for a lot of people.
Yeah, I understand. So if I had $1,000 in savings, I shouldn't go into Robinhood. Well, I mean, I shouldn't put all of it, or shouldn't go at all.
Well, if you have $1,000 in savings and you have $6,000 in debt, and we're not talking about the good debt. We're not talking, and I know I'm kind of going off in a different direction, but it's all correlated. We're not talking about the good debt like you bought a car, and everybody needs to have a car because you need a good, reliable vehicle to go to work. Or maybe you have a mortgage. I'm not talking about the good debt. I'm talking about the bad debt, like the credit cards or the debt that has very, very high interest, or the personal loans. Those are going to have to be the things that you tackle first before you say, well, let me take this money and go invest it in Robinhood and buy stocks of GameStop or put it in
and you say that because of,
or whatever.
Are you saying that because of the interest?
I'm saying that because of the interest. Yes, because you see, when you put money into the stock market and when you buy a share of a particular company, you're putting money in there because you're hoping that over the course of time that money's going to grow. But if you have debt at 17% interest, you know for a fact that debt is going to grow. Like that's a certainty. It's not a certainty that your money's going to grow in the stock market. It's a hope. It's a projection. It's like you have conviction in a particular stock that it's going to go up in value. So that's why you invest money in. But debt is definitely going to go up in value unless you eliminate that debt. So why not when you eliminate an annual debt that's charging you 17% interest, like when you like actually eliminate that, that's 17% interest that literally you're making for every year that you no longer have that debt. So those are the things that you need to target first before you say, okay, now I'm going to go put money into the stock market.
Could it be real simple and just, I mean, for an example, and I'm just thinking out loud, but if I put $1,000 into the stock market and it makes me, $50, right? That's not really, what's that AP? What's that return? $50 is
What'll be
5%.
like the
5%.
like 5%.
So if I get 5%, yeah, 5%. That's right.
5%.
So if I did 5% and I got a 17% credit card, like even the 5% couldn't even catch my debt. So
Nope.
it kind of makes no sense, right? You're really not seeing any results. It just feels good.
Right. Exactly. That's one of the reasons why. The second reason why, if you only have $1,000 in savings to your name, the second reason why you shouldn't put that into Robinhood or any stocks for that matter is because your level of emotion attached to those $1,000 is super high because that's all you have. The moment that you see the balance start going negative, like 1,000 to 900 and then 800 and then 700, because that type of stuff happens in the stock market. The moment that you start seeing your account go negative, you cannot handle your emotions. So what happens? You sell and you're like, oh man, I'm just gonna cut my losses. And so all you did was turn $1,000 into $700 because since that was all you had, your level of emotion was so high that you weren't able to stomach your stocks coming down to 700. And then a month or 2 months later, they go back up to 1,200 or 1,300. So in order for you to be able to say, hey, I'm going to actively put money into the stock market, I really, it has to be by percentages. So if you have $10,000 in savings and you put $1,000 or $2,000 in the stock market, that's fine because that's no longer all you have. So your emotional level or emotional attachment to that money is significantly less.
Yeah, well, so just, I mean, do you have a rule for somebody? Maybe for an example, if I had, let's say I did have 10,000. Well, actually, here's the rule. I mean, here's that question. Do I have to be debt free before I should start investing in the stock market?
Not debt free, because I do think that there's certain debts that are good debts. Circling back to car debts, I mean, as long as it's a low APR, because you have good credit and a mortgage, I think mortgage is good debt. So you don't have to eliminate good debt, but I wouldn't recommend investing if you have bad debt, and bad debt being personal loans or credit cards, because even student loans tend to be a little bit higher than your regular loans, like your mortgages and whatnot. But I mean, that's a loan that you have to take to be able to further your career. So I don't necessarily call that bad debt. Maybe it's like at 7% interest, so it's like not the best interest in the world, but it's still debt that you have to acquire to be able to further your education.
If we just wait around, dude, it's all going to be forgiven. Don't worry, it's all going away.
So I've heard.
Hey, so actually, here's a really good question. So I don't, if you guys have questions, throw them in the chat, by the way, but I don't see this, but this is a question that came to mind for me, because what if you got a kid? I mean, I'm not saying like a kid, but what if you got a 16, 17, 18-year-old child, kid, son, daughter, who says, hey, mom or dad, give me $100 so I can play in this thing called Robinhood? Like, what are your thoughts on that? Because I actually think that's happening. I would probably venture to guess that 10 to 15% of the stock invested through Robinhood is in that way.
Sure.
Maybe.
Sure. So let's say in an ideal situation, let's say that we have debt under control and we have money in savings, and everything is where it needs to be. So now let's talk about putting money into Robinhood. I personally feel like showing your kids how to invest money, whether it's in Robinhood or just a straight up savings account, whatever, just teaching them the concept of saving money is great. Now, if you can teach them that and then also teach them how to invest, I think that's great too. And there's ways to do that. There are companies with a lot of future, or there are indexes. An index is a group of companies that you can invest in the stock market, that are safer, because since it's a stock composed of a lot of different companies, a lot of different sectors. It tends to move less. It's what they call volatility. Volatility is movement in the market, either up or down. So it tends to move less. Therefore, it's less risk. So there's ways to do that, and there's ways to teach your kids how to do that. But you can't teach your kids how to do that if you don't know how to do it yourself. And so that's where the personal education comes into play.
I've seen this quite a bit, man, where parents give their kids $100 or $50 and they say, hey, go for it. And they put $50 or $100 in Robinhood, and then they put it on, I don't know, something cheap, whatever, CCIV or something.
Sure.
And then it goes up $4 and then they cash it out. and then they do this. It's like this habitual cycle of making $2 and $5 and $7. So tell me what's so right or wrong about this.
Sure. So we kind of circle back to all investments. It doesn't matter what the investment is, or it doesn't matter what the instrument is. Anything that you set up for the purpose of growing your net worth. It could be mutual funds, it could be stocks, it could be cash value life insurance policies, which is something that I love. I mean, it's something that I've preached on for a long time, and I think those are amazing assets. It can be an annuity, it could be real estate, any type of asset. Everything has to be long-term, guys, because we circle back to the $1,000 making $50 a month. Oh, sorry, not making $50 in interest off of the $1,000. That's not going to change your life. That's not anything that's going to make your financial situation any better. Investing in a company that has a lot of projected growth over the next 5 years, that's what's going to make your financial situation better. So go ahead.
But for the kid, $50 changed his life.
Yeah, sure.
I'm only telling you this because there's parents watching this and they need to hear this, right? Because this is the problem.
No, look. I personally feel. I'll tell you what I do with my kids, and then you guys can agree or disagree. My kids are too young for the most part. I'm sure there's kids that are a lot more mature than mine, but they're too young to be able to understand a lot of the complexities that come with investing in a particular company. But I can teach them how to be diligent with their finances. I can teach them how to not spend money that they don't need to spend, and to save money, and to continue to grow their savings. Those things are very easy to teach. If in the future I want to open a Robinhood account and let them buy shares, I'm going to have them buy shares in an index, or something that I know isn't going to have a lot of movement, something that I know will have consistent growth over the next 2 to 3 years. Because like I said, there's a lot of complexities when it comes to investing in individual companies, and making $2 or $3 on a $10 investment. I mean, that's not a good habit. At the end of the day, that's not a good habit to have. I will tell you that there are people who are professionals, and I know because I've met them, that do that type of stuff for a living, where like they'll buy a share at the beginning of the day, and they'll read the charts and they'll see how the stock market is moving, and then they'll close their position an hour or 2 hours or 3 hours or 8 hours later. But like those guys like legitimately do that, and they spend literally years learning that trade. So you're not going to tell me that you, with your Robinhood app, you're going to be able to do the same thing that those guys do, because you can't. First of all, you don't even have the freaking charts the way you're supposed to have them on the Robinhood app. So there's absolutely no way that you're going to be able to time that. So what's going to happen when you do things like that, and if you teach your kids those habits, is like the first time you might win small, and then the second time you might win small, and then the third time you might win a little bit bigger, and then the fourth time you're going to completely get wiped out, right?
So I think it, honestly, in my opinion, I think it's like gambling if you don't know what you're doing.
It's definitely gambling.
It's just a legal way of gambling.
Sure. And if you're better at blackjack than you are at stocks, you'd probably you'd have a higher probability to make money if you just went to Vegas and took the $1,000 and gambled it, than you would trying to time the stock market, because that's not going to end well for you.
Yeah. So just a side story is I've seen I have seen so many people. I have family members who tell me, "Oh yeah, I got a Robinhood account, and I put $100 into it, and I've been, I bought a little piece of Amazon, and I got a little piece of this, and then I'm like, so what are you doing with it? Like I'm not disrespecting them. I don't call them out or say anything, but I'm wondering, what do you do with this? And they're like, well, it went up by like $30. So I'm thinking about cashing it out, and I'm just like, oh my gosh, like you're not. That's exactly what's wrong with the market today. Actually, I think that the stock market is super overinflated because there's a bunch of people using apps like Robinhood,
Sure.
buying stocks that they just. So let's give some tips here, because one thing I have learned from you and from others is that there are really two types of, if you got of investors, if you will. There are people who actually play in the market and are going every day, and they are monitoring stocks, and they're trying to not time the market, because you can't do that, but they can actually study a stock and really learn it. And then there's people that
they study the chart. They study the chart and basing it on certain patterns and volume, being how many people are actually buying the stock at a particular moment in time. They're able to make an educated prediction as far as in which direction the stock's going to move. But that's an art, man. Like that actually takes time.
So the opposite is people who don't know a lot about investing. And you just mentioned they can go to ETFs or whatever, but there are also other ways. You don't have to go to an ETF to be. There's no such thing as safe, but they're smart, right? So kind of give us smart ways to invest. I mean, there's nothing safe about the stock market, but what's a smart way to do it? I mean, what kind of stocks would somebody buy that are smart?
Well, so I'll let you know what I'm doing, and it's because I feel like it has a whole lot of future. I'll give you one stock in particular, which is a very expensive stock, so I wouldn't necessarily recommend you starting with something like this. But like Tesla, when I started buying into Tesla, it was already super expensive. Right? And the only reason why I hadn't bought into Tesla prior was because it's like, man, that's a lot of money for one share of Tesla. But the more research I did on that company, and the more I learned about what they're trying to do moving forward, the more I realized that, hey man, there's a lot of value here over the course of the next 5 years. So when I started buying Tesla, which wasn't too long ago, I started buying Tesla at $800 a share. And I was like, okay, great, man. And then what happened was it went up to $900 a share. And no, I didn't sell, right? I didn't say, oh, I made $100, so I'm going to sell it so I can profit the $100. I didn't do that. I was like, okay, great, it went up. And then what happened was it came down to $800 a share again. And I was like, okay, cool. Then it came down to $770. And I was like, okay, cool. Let me buy another share because it's a little cheaper. Then it came down to $750 a share. I was like, okay, let me buy another share. And then it came down to $700 a share. And I was like, okay, there's no way that this is going to go down anymore. So let me buy 3 shares. And then it came down to $650 a share. And I was like, oh, shoot. I was like, okay, well, let me buy another share. And then it came down all the way to $580 per share. And then I bought about as many shares as I could buy. You see, so when I look at stocks, and it doesn't matter what stock it is, but I'm using Tesla as an example. I look at stocks like Black Friday. So the reason why so many people go out on Black Friday and almost murder each other every single year after Thanksgiving, the day after we thank God for all of our blessings, we go out and try to murder everyone so we can buy a TV 25% off. But the reason why people go out on Black Friday is because there's a lot of sales. Like everything's discounted, everything's red. So the same thing applies to stocks. When you have a stock that you know is a long-term play, something that you believe in, something that you think has a lot of growth, like for me is Tesla, the cheaper that stock gets, you don't sell, you buy more because it's discounted. And so then what happened was I kept buying. And so now today, Tesla is back to, I think, like $730 a share. So it's already gone up. But the reason why I bought it is because I think that in the next 5 years, Tesla will be at $3,000 a share, right? Not $750 or $800 a share, what it is right now. I think in the next 5 years, Tesla's going to be at $3,000 a share, which means that at that point, I would have tripled my investment. So if I put in, let's say, $25,000 worth of Tesla shares, just as an example, I'm not going to tell you guys exactly how much money I put in there, but if I put in
Don't
like
lie.
25, if I put in like 25,000, then the 25,000, if we go up to 3,000, then I'd be like at 75 or $80,000 of my original investment. That's smart investing, and that's what that's really what people need to figure out a way how to do. Not just say, well, I'm going to put $1,000 in and I'm going to cash out $1,050, because that's not going to do anything for you.
So just, I mean, out of like, I guess what we're trying to cover here is there, I mean, besides Tesla, let's stop from, I guess, think about not a category of stocks, but is there, I
A
mean, what I'm
sector.
thinking is, so not a sector either, just really like when I'm thinking, I've never invested anything before. If I'm that guy, I mean, when I look at stocks, what should I be looking for? Like specific,
Sure,
what?
sure. You personally, I think that you need to be looking at companies that are innovating, companies that have a lot of feature, not necessarily like dying companies or companies that may not have too much
American
future.
Airlines. No.
Yeah, like right now, airlines are kind of up in the air. Um, Carnival, cruise lines, I mean, that's kind of up in the air. Who knows when those are actually going to be back up and running? But if you look at certain sectors, like me, like I'm real big into electric vehicles. I personally feel that over the course of the next 5 to 10 years, um, there's going to be a huge growth in the electric vehicle market. So companies like CCIV, like Neo, like Xpeng, like Tesla, those are all electric vehicle companies. Like I try to invest as much money as I can afford to invest. And if I buy the share at $35 and it goes down to $30, then I just try to buy more. I buy as much as I can, because I'm putting money in there that I don't need right now. I'm putting money in there that I'm wanting to grow over the course of the next 5 to 10 years. And maybe in 5 or 10 years, if I find something better to invest in, then I can sell my shares then, take the growth and redeploy it somewhere else. But I'm not going to be doing this. I'm going to sell it in a week and make $25. I'm not going to be doing that stuff. Now, mind you, I do know a little bit about how to day trade stocks, and sometimes I'll buy a stock one day and sometimes I'll sell it at the end of the week. But that was my intention from the very beginning. Because maybe I read a certain pattern, or I saw something that indicated that particular stock was going to go up, but it wasn't something that I was intending to hold long term. Mostly all the money that I have invested, it's all long term. They're all long term plays.
Good. So if I'm a newbie, you would say just invest in things that are maybe innovative, something that I know maybe something that's going to come along in the next few years, or maybe something that will be popular in the next few years. Is there any other alternative to that?
The other alternative would be to invest in an individual index. There's ways for you to capitalize on the growth of the market without any risk. That's actually what we do. That's what we've been focusing on for the last 5 to 6 years. So whenever we utilize our financial companies and our life insurance companies, we're able to give clients the ability to participate in the growth of the stock market while still having a lot of guarantees. So because the majority of the clients that we've dealt with in the past are very frugal, very conservative. They really don't want any risk associated to anything that they're doing. But the reason why I started venturing out into the stock market, into cryptocurrencies, is because number one, I see a place for it, and I understand that there's a lot of people that want to know more about it. And number two, I really want to be well informed on everything that we do. I mean, even if we don't do direct stock market investment, we have partners, we have people that we're associated with that do manage people's money in the stock market. I will tell you though, guys, that, and we circle back to like $100 or $200 a month. If you want to put $200 a month into the stock market, the best person to manage that is you. If you take that to anybody else, it doesn't matter how much you think $100 or $200 a month is. There, it's not in the grand scheme of things, David. It's not something that may be prioritized at a very high level.
Yeah. Anyways, I mean, in my opinion, without having a lot of experience in the stock market, I do have some money in there, and enough for me to sometimes be scared. Um, I'll tell you, it's better. It's better to be in some sort of investment strategy than none. But what I've learned over the years is I like to control my investment strategy because, and that's just a personal opinion. And I mean, maybe if I had, 100 million or something, I'd think differently. But until then, I feel like if I'm going to lose the money, at least I lost it.
Sure. Right. You don't have anybody to blame. Correct.
Yeah.
It was all you.
Yeah, and I think that's a big deal for most people. I think most people who want to start investing in things, I think their challenge, and that was mine in many years too, which is I don't trust people with my money, and I want to be able to get my money whenever I want it. And I think that's what the appeal of Robinhood is that you could put $100 in, and if you get scared in a day, you might pull out 99, but at least you can pull out 99.
Sure.
And I think that's what most people are dealing with right now when it comes to Robinhood. There's some risk, but it's more like gambling, and then there's some security because it's more like cash in some respects. But do you think that when people are looking at Robinhood, I mean, do you think that Robinhood is convincing people to invest more money in specific stocks or pushing people to spend more money than they need to? Or do you think it's just really people putting more money because they got it? Because I feel like people are putting more money into Robinhood than ever.
I think that the majority of uneducated retail investors, and when I say uneducated, I'm not saying that you don't have a college degree. I'm saying that you're uneducated when it comes to what it is that you want to do with your money as it pertains to stocks. I think most people look at it as gambling. I think that's the way they look at it. It's like Vegas, and they put in a little bit of money, and when that little bit of money turns into a little bit more money, then they cash out. They're like, oh yeah, I'm a winner, right? If that's the way you want to look at it, and you want to play with 100, 200, $300, and that's it. I mean, it's like gambling. It's a hype. I mean, that's what it is. It's a hype. But if you're really looking to start securing your financial future, right? So, like at some point in the past, Tesla was at $80 a share, and today is at $730 a share, right? So, if what you're trying to do is secure your financial future, then there's certain things that you need to do, and you need to do things in a certain way to be able to grow your net worth to a level to where you're going to be comfortable at some point. Just putting in $200 and let's see what happens blindly without doing any due diligence and without having any type of conviction in the company is just going to get you hurt. That's all. It's going to get you hurt, and it's going to get you discouraged, because what's going to happen is you're going to end up losing a lot of money, and you're going to be like, the hell with this, the stock market isn't for me. When if you would have maybe put your money into a company that's more reputable, and maybe you would have done that consistently on a month-to-month basis over the course of 5 years, you could be profitable thousands of dollars. It's not about the act of doing it, it's how you do it.
Yeah, I would agree with that. Do you think that I know my opinion, but do you think that kids doing this, because we talked about it a while ago, do you think it's a bad thing or a good thing? Literally, I mean, by percentage of times doing it.
I think it's a bad thing if they don't have anyone to reference or to guide off of, because we circle back to the savings. We circle back to the management of money. The reason why, thank God, I've been really good with my finances is because my mom and dad were really good with their finances. My mom and dad didn't invest any money. It was just, that was not something that they were familiar with, and so because they weren't familiar with it, it was just something that they never participated in. My parents did not invest money. I'm pretty sure your parents were exactly the same way. My parents saved money. That's what they did. They saved money and they were frugal. That's what they did really, really well. So I learned those techniques from them, and then I was able to educate myself and then say, okay, so I've been able to save all of this money because I've been very frugal and watched my finances. Now, how am I able to take this money and turn it into more money? So you can't skip steps. There's a reason why you crawl first, and then you walk, and then you run. There's a reason why there's a pattern to those things. And the same thing with money management. You crawl, then you walk, and then you run. You can't just go straight to running. That's not going to end well for anyone. So if you're not teaching your kids good money management concepts, like save your money. Why are you going to buy that $6 toy? You don't need it. Save your money. Save your money. In a year, you're going to have $300 saved, and then maybe at that point you can buy that game console that you've been wanting to buy because you were able to say, like, start with the basics first before you say, well, let me give you $50 and go invest it in Dogecoin or whatever. That's my philosophy. I mean, whether you agree or disagree, like I said, this is just for educational purposes only. But I really think that you need to teach your kids basic principles of money management first before segueing into the investing.
Yeah, definitely. I honestly don't think that it's a good or a bad. I'll just say that it has to be monitored. I wouldn't want anybody to think this is gambling, and I think that's what most people think about it as. And I think if you train your kids to be, in some respects, we'll call it fearful of losing money, then they'll save more money.
Sure.
And because it really just disappears out of an account. I mean, that's the crazy part about Robinhood or any of these apps. I mean, by the way, there's multiple apps you can use. I use the Fidelity app, and there's Robinhood, and there's M1, and I can't remember.
There's Webull, and yeah, there's a lot. And so all of these platforms, guys, once again, it's just a free broker. So yes, if you're going to create a platform, they are going to ask you for your social security number. That's very common because it is a financial institution. Whenever you open an account with Robinhood, you're actually opening an account with a financial institution, very similar to like a Wells Fargo or a Chase or whatever. It is a financial institution, so you do have to give them all of your information. And guys, you will pay taxes. I don't think people understand this, but when, let's say you buy $1,000 worth of a particular stock, and let's say that turns into $2,000, and you sell it and you made $1,000 profit, everybody's like, yeah, man, I'm good. You're gonna have to pay taxes. I don't think a lot of people understand that, but the financial institution, whenever it's tax time, they will send you a tax form, and you will have to pay taxes on that money that you earn. So nothing is tax free. And those are things that you need to understand as well. And I'm not saying don't invest money in the stock market. And I'm not saying don't teach your kids how to invest money. I'm not saying that. I'm just saying that you have to have some sort of a process, and you have to have some sort of rules. You can't just go in blindly and start throwing money every which direction and expect for things to go well, because it's not going to go well. And even if it goes well a couple of times, eventually, and that's where we titled this video, Robinhood, the good, the bad, and the ugly. Eventually what's going to happen is it's going to get really, really ugly. I know that there was that one young man that killed himself because and I'm not gonna go into specifics of what he did, because it's a little technical.
He just had a lot of debt.
Yeah, but what happened was he accumulated a lot of debt, because a lot of the times when you open these accounts, they'll allow you to borrow money to invest. So he borrowed money to invest, and he ended up with so much debt because his investments went south, and it was so much money that he thought he owed, even though there was a workaround, and his parents knew nothing about it, right? So he killed himself. And I think that's awful. I think that's god awful. So it's like everything else. There has to be a learning curve, and you have to learn before you teach your kids. And if you don't know, then your kids aren't going to know. Right?
Cool. So let's kind of end with the last topic, which is, how does somebody what kind of recommendations or resources can somebody use right now to get better at investing in the stock market?
Well, for starters, I think that I think YouTube is king. There's so much information on YouTube, and actually, there's so much information on YouTube directly from a lot of these platforms, from the Robinhood, from the M1 Finance, from Fidelity, and they just kind of teach you just basic principles of what you can do to start off with. I mean, that for starters, that's a great place for you to start. Also, I would recommend for you to take a look at companies that you feel have a lot of future. I'll tell you one lady that I follow a lot, that I think she's just amazing when it comes to to just having the vision as far as companies that have a lot of potential growth is Kathy Wood. Kathy Wood, she has her own investment company, and she actually has her own indexes as well. But if you look up Kathy Wood and you look up the companies that she's investing in, like that's definitely a good place to start, because that lady is legit. She's a very, very smart lady, very, very knowledgeable, and she invests in companies not for what they are going to do today, but what they're going to do over the course of the next 5 to 10 years. And that's really what you want to do as well. Don't invest money today so you can make a quick $50. Invest money today so you can make 50, 60, $100,000 tomorrow. That's what you want to do. So that's one way to go about it. And then another way to go about it, which is something that we're working on, is just figure out ways to get educated. And one of the things that we're working on right now, and this is something that David and I have been kind of just putting together and we have in the works, it is a platform for us to be able to chat, for you to be able to watch a lot of content and learn how to do a lot of this stuff. Because like David said, if I'm going to lose money, I'd rather be the one that lost the money, right? So if you're going to invest, it'd be good for you to learn how to do it, because it's your money. Nobody's going to take care of your money more than you. So we have something that we're working on for you guys as well.
Yeah, I had somebody ask us here on the, and by the way, we're going to give stock picks, Steve.
My stock picks for the week.
And I would tell you, I would be honest and say that we'll tell you what we've done, but I don't think we'd give you advice. I think.
Yeah, I wouldn't give you specific stocks, because we don't want to do that. We don't want that liability. I will tell you that I firmly believe that certain sectors, like the electric vehicle sector, I don't know, what's another one that comes to mind? And anything having to do with digital, with our digital future, I think that just has so much growth potential. And once again, circling back to Kathy Wood, I mean, if you watch some of her videos and she'll explain to you exactly why she's picking some of those companies, I think that's a great place to start for sure.
Awesome. Well, thanks for sharing that, Raul. So there's a lot of resources out there, guys, and YouTube has a wealth. Unbelievable when I tell people how we get so much information. All the stuff we use, guys, me and Raul personally, obviously there's probably stuff outside of YouTube, but a good percentage of the information that we've gotten has come from YouTube, because there are a lot of people out there that are very smart and educated and have really invested a lot of their time and energy in learning. And that's our shortcut, because we both work very long hours and do a lot of stuff. And I sometimes just want to sit around. And I think that's the whole goal of the course that we're creating, is we don't want you to have to go do all the research when we've already done it all. You know, we've come to the conclusion on a lot of things, from finance to investments, credit, business operations, business in general, structuring real estate deals, investments. You know, I can't tell you how much Raul and I have had and strategized about all these things. And every time we have a strategy session, if you will, and that's not really what we call them, we just call them drinks. But every time we do that, we realize how much we need to know more of it. And so we go back and we find out more and we research more. And Raul is just taking a kind of the helm, if you will, in the stock thing. I'll call it the stock thing for me, because I'm not as active as he is. I just put money in something and I pick the things I hope will win, and God willing, one day we'll be real rich, hopefully.
Sure. Fingers crossed. Guys, it all circles back to education. And I'll kind of close with this. You know, a lot of the times as I'm looking for content to learn, because it's not just YouTube. We do a lot of YouTube. I do a lot of articles. I've invested a lot of my own personal money into programs that have taught me a lot of things over the course of the last 2 years. That, you know, they weren't cheap programs. You know, a $5,000 program that taught me about stocks. Like, I invest my own money in things that I see value in. So I will tell you that we are constantly learning. So like when it comes to real estate, which was the video that we did last week, David is a lot more knowledgeable in real estate than I am. So that's why last week I said, well, let me kind of ask you some questions about real estate. And then when it comes to business, David knows a lot about business. When it comes to sales, because I've been in sales for the last 6 years, I mean, I got my sales on pretty well. But I will tell you that education is key. Doesn't matter what you want to do. And it always astonishes me how, like, as I'm scrolling through YouTube, right, I'll see a Cardi B video with like freaking 6 million views or something stupid. And then I'll find this really smart dude on YouTube. Like one of the dudes that I think is like super smart is Meet Kevin. Like Meet Kevin on YouTube. I mean, that guy's like very, very legit, very smart. And that dude is like freaking 400,000 views. 400,000 views on a dude that's talking about current events and the stock market and finances and inflation and you know where our economy is going. And then we have this other chick that's talking about her WAP. You know, it's like, you know, it's where do you want to put your attention? Do you want to put your attention on something that's going to make you better, or do you just want to do what everybody else does and be in the same place forever? So it's just about choices, guys. Life is about choices.
There you go, man. Well, thanks for sharing this, guys. And so we're going to come up with our next topic for next week, guys. But if you watch this today, I hope we shared with you a little bit about Robinhood. And really, it wasn't about Robinhood. Robinhood's just kind of the tool, if you will,
Sure.
in the investment talk. And so hopefully if you're an investor or you're thinking about getting into investments, maybe this gave you some thoughts or some ideas. Please message Raul or me anything directly if you have specific questions. We'll do our best to answer them. But this is going to be part of our course up and coming. We'll be having talks about how we can invest money, or not how, but those rules that Raul was talking about, when you should invest money, why you should invest it, how you can grow your, or not how, but what's the plan of growth and how you should think about it. So instead of just going there and pulling the slot machine or hitting the buy button, that's kind of what we want to help people avoid. There's many people out there today, and this is just what I've seen, is that there's so many people out today who really want to do better for themselves and really want to do great things in the world and really want to want to put a secure future for their kids and for their families. They just have no clue how to do it. And that's kind of why Raul and I are talking about these things. It's not really so we get publicity. It's more so because, well, the teacher learns twice, and we're learning here.
Sure.
So
we have a lot of learning to go, for sure.
You want to add anything before we close out?
No, guys, we just appreciate your time. For those of you guys that are watching, and just know and understand that like David said, the reason why we're doing this, and really the reason why we decided to start creating this platform for you guys, which we hope we'll have ready at some point this year, because we have a lot of stuff going on. It's, at least for me, and I know it's the same thing for David, I'm tired of seeing people broke, and I'm tired of seeing people continue to make the same stupid mistakes with their money over and over and over and over again. And like I told David last time, I said, look, sometimes I'm sitting down with a client and like I really want to help them with some sort of a product or something that we can offer them, but I can't because their financial situation is so bad that there's nothing we can do unless we go and target that. So by doing this and by doing this type of stuff and by giving you this type of information, we can get you there. We can actually get you to a better place so that one day, 15, 20 years from now, however long it takes, you can say, man, everything's paid off. I have $150,000 in savings and investment. I finally bought my first house. I started my business, and your life is moving in the right direction, as opposed to where you are right now, which for a lot of people is not a very favorable scenario.
Perfect, man. Well said, brother. All right, guys. Well, if you like this episode, stay tuned. We'll be announcing our next one. If you guys have questions, again, shoot us a message directly. If not, you guys have a fantastic and amazing Tuesday night. We'll talk soon. Bye-bye, guys.
Thank you.
Let me